The greatest fortunes in history weren't made during booms, they were made during crashes. Warren Buffett buying during 2008, John Paulson shorting subprime making $4 billion in 1 year, distressed debt investors buying pennies on the dollar, real estate investors acquiring foreclosures, the Rothschilds buying after Waterloo, JP Morgan buying after 1907 panic. Every major crisis creates a brief window where assets sell for 10 to 30 cents on the dollar, but 99% of people are too terrified to buy. They watch from the sidelines as the wealthy load up, then wonder years later why the rich got richer. The secret isn't timing the market perfectly. It's recognizing distress patterns and having capital when others don't. Let me show you the 5 types of distressed assets that create once-in-a-lifetime wealth and how to identify them before the recovery. Distressed debt is the ultimate asymmetric bet. Companies in trouble issue bonds that trade at massive discounts. A bond with $100 face value might trade at $20 during panic. If the company survives, you make 500%. If it doesn't, you lose 20%. Professional distressed debt investors made billions in 2008 buying investment-grade bonds at 50 cents that eventually paid pair. GM bonds traded at 15 cents, then paid full value after government bailout. Ford debt traded at 30 cents, recovered to par. Airline bonds during COVID dropped to 20 cents, then doubled. The key is distinguishing between companies that are illiquid versus insolvent. Illiquid companies have temporary cash problems but viable businesses. They survive if credit markets reopen. Insolvent companies have broken business models. They die eventually. Distressed debt investing requires deep analysis, but the returns are extraordinary. 30 to 50% annual returns are common for skilled investors. Real estate in foreclosure creates generational wealth. 2008 to 2012 was the greatest real estate buying opportunity in 80 years. Homes selling for 50% below replacement cost, rental yields of 10 to 15%, buyers who purchased then now have properties worth 3 to 5 times what they paid. The same happened after savings and loan crisis in early 1990s, after Great Depression, after every major credit crisis. Real estate becomes distressed because over-leveraged owners can't refinance. Banks foreclose, desperate sellers accept any price. Buyers with cash and courage acquire assets below intrinsic value. The key is buying in good locations with temporary problems, not permanent decline. Buying Detroit was a mistake. Buying Phoenix or Miami or Las Vegas was brilliant. You want areas with strong long-term fundamentals experiencing short-term panic. Distressed equities offer the highest returns but highest risk. Companies trading below book value during panic stocks at 10-year lows. Sectors completely abandoned bank stocks in 2009, trading at 3 to 5 times earnings. Energy stocks in 2020, trading at 2 times cash flow. These create 100 to 500% gains in 2 to 5 years. Buffett's greatest investments happened in crises: American Express during salad oil scandal, Washington Post during 70s bear market, Bank of America during 2011 European crisis. He buys quality companies experiencing temporary problems at prices that guarantee long-term success. The formula is simple: find companies with strong competitive advantages, wait for crisis to create panic selling, buy when price is 50% below intrinsic value. Leave a comment below telling us where you're from and whether you've ever bought distressed assets during a crisis. Also hit that subscribe button, because what I'm about to reveal about crisis investing patterns will show you exactly when these opportunities appear and how to prepare. Let me walk you through the complete playbook that billionaires use to buy fear and sell greed. Commercial real estate distress creates massive opportunities. Office buildings empty from remote work, selling at 40% discounts, over-leveraged landlords forced to sell, regional banks dumping properties. This cycle creates buying opportunities for those with capital and patience. Buying distressed CRE requires understanding which properties have permanent versus temporary problems. Class A downtown offices may never recover. Suburban multifamily will recover quickly. Logistics and data centers are structural winners. Buying requires significant capital and ability to hold through recovery, but returns of 30 to 100% are achievable. The psychology of distressed investing is everything you're buying when headlines scream disaster, when friends think you're crazy, when experts predict worse to come. Successful distressed investors are contrarians with discipline. They prepare during good times, they hold cash when others are fully invested. They study historical patterns, they wait patiently for crisis, then they act decisively when panic peaks. The key is having a systematic framework, knowing exactly what you'll buy at what price in which scenario. Eliminating emotion from the process, the majority of people will never do this. They're psychologically incapable of buying falling assets. That's why the rich get richer during crises. If this video showed you how crises create wealth, leave a comment below telling us where you're from and what you think about distressed asset investing. Are you preparing for the next crisis, or will you panic like everyone else? Share this with anyone who wants to understand how billionaires actually make money, and hit subscribe so you see the next opportunity before it disappears. Because the next crisis is always coming, and it always creates the same opportunities for those who are ready.